Good morning. Welcome to the B.F. Anderson Technical Report for June 23rd. If you make a mistake and do not correct it, this is called a mistake. Confucius. You know, we all don't want to make mistakes. I hate making mistakes. You know, the only good stock is a stock that goes up. But however, there are mistakes that you're going to make, and the most important thing to learn is if you make a mistake and you've realized you've made a mistake, you have to really take defensive action as soon as possible. Now, one of the biggest mistakes, as I go back over time and look at my history of the stock market, I would say the biggest mistake that I have made is I buy stocks sometimes that are extended in price and I'm not patient. Patience is the key. Now, this is called FOMO, fear of missing out. So it's a mistake when you get into a bear market, which we're in now, to keep, you got to wait actually for the turn. And you can kind of pause your video player here and kind of look at this, and you can see how human behavior, everybody, the market's going up, everybody feels like things are great, and then the trend goes down. Now, here's an example of what I'm talking about, meaning patience. If you look here, this is the S&P 500 down here. Now, this is 2003. Now, the market made a low in March, around March 10th, March 9th actually, of 2003. So the market made its low. And if you follow Apple, which we were following at the time, and if we were just patient and waited for the signal, it really made a lot of difference. Whereas, the market bottomed here, but Apple didn't take off till, quite a few days after that, several weeks. So patience would have really paid off here. And that's the key to this whole game, is being patient. So we're in a downtrend. We've had the first leg down, which started at the beginning of the year, second leg down, and we're in the process of the third leg down. So, if you felt fear of missing out here, and because this happened, and then this comes along. So you have to be patient. Now, on the monthly graph, you can see, again, we continue to be below that 10-month moving average, and that 10-month moving average has turned decisively down. Here's the weekly. On a weekly basis, the 35-week moving average has turned decisively down. Market is in a downtrend. We need to be patient. It's just the reality of the situation. Here's the S&P, same pattern. First leg down, second leg down. We're now in the third leg. Now, usually good things come in threes, so hopefully this area here is where the market hopefully puts in a bottom. However, on the monthly graph on the S&P, same thing as the NASDAQ. On a weekly basis, same thing. We've got a decisive downturn here. We are in a downtrend. Now, the aggression index, it continues to have problems. We've had pretty much a waterfall decline here. We're getting somewhat of a bounce, a little bit of a bounce. Now, realize this is a ratio comparing growth stocks, technology stocks, to consumer staples, things like toilet paper and toothpaste. So when the line is going up, it's telling you that technology is outperforming the consumer staples. But you can see that rally has basically failed. The only good news is we haven't made a new low. Now, the best scenario would be like back here, where you get the waterfall decline, but then you start to consolidate, and then you break out. Again, we have to be patient. Here's the 10-year Treasury Note, back up around. It's pulled back from around 3.5% to about 3.156. Price of oil pulling back, got up to over 120 a barrel, now down to about 106. The financial stocks continue to be in a downtrend. Now, the financial stocks are important. You do not want to lose the banking system. You want the banking system to be healthy and prosperous. But right now, those stocks are not going up. They're going down. Here's the new lows. Again, we got that big spike in new lows last week. Still a problem. Just the other day, we had 270 new lows. We want to get the new lows down here around 40 or less for an extended period of time. That would really look like a bottoming process. Sentiment, I've updated the numbers here. Right now, the historical average is 38% bulls and 30.5% bears. So the middle ground is 7.5%, And as of the latest reading, we're at roughly 39%. So pessimism continues to be the dominant emotion right now, which is, again, what happens at market bottoms. Trend strength 0. We did get up into this area briefly, but it failed. We are getting somewhat of a dead cat bounce, though. Here on the S&P, same thing, trend strength 0. So basically the message here is continue to stay cautious, have good amount of cash on the sidelines, and if you do some buying, be very small in what you're doing. Keep it low. Volatility index continues to be elevated above 30. We're not getting that capitulation reading that we're looking for. We would like to see that get up around 40-ish, and that would hopefully be the sign that the market is finally washed out. Now, I want to mention a group of stocks that we're going to look at here in a minute that are starting to look somewhat interesting. This is the PGJ. This is the Golden Dragon China ETF. These are all the Chinese stocks that trade here in the United States. Now, you can see definite downtrend, made a low around March the 14th, starting to consolidate, starting to try to turn up. So we're starting to see some Chinese stocks that are looking somewhat interesting right now. However, here's the top 5. Again, this is not a buy list. This is just a list of stocks that have strong momentum that we're just keeping an eye on. This is coal. Actually, Germany announced that they're going to refire their coal plants. So the price of coal has been in an uptrend, but now is somewhat breaking down. Energy stocks are starting to break down. Now, here's Health Equity. This is a software company involved in the health industry. Actually looks pretty good. Would keep an eye on Health Equity. Now here's a Chinese automobile manufacturer, a company called Li Auto. Now they've got a SUV that they manufacture called the Li One, and it is a hybrid, and it gets approximately 500 miles per charge because it being a hybrid. Their sales were up dramatically in May, and like 170% over last year. So this stock is really taken off here. So again, I would keep an eye on the Chinese stocks. They actually starting to act better. Here is Scorpio Tankers. Now this is a shipping company that primarily ships oil. You can see here it's kind of consolidating here. Did break down a little bit the other day, but continues to look somewhat strong. This is Titan International, which is tires, basing, and so forth. So what I'm saying is, if you make a mistake, correct the mistake. Don't sit there and look at it and say, hey, I've made a mistake, and then do nothing about it. You've got, when it comes to the stock market, you've got to take decisive action. If you have any questions, please let me know.